your investment plan is going to be your roadmap for investing success, for making your money work for you. Now, I know it may seem like a lot of work, but trust me, having the groundwork in place means that you're laying a strong foundation for your investments. Once you have a plan in place, you can rely on the system to work for you, and you can fine-tune it as you go along. Now, to make it easier to understand, I'm going to build an investment plan alongside. So you have the template with you. Use the template to put down your particular investment plan, but I will build one alongside as well. Now, this particular plan will have my point of view, but the idea is to show you the kind of details that go in putting together your investment plan. All right, so let's get started. The first thing that we put down in our investment plan is our objective for our investing. Now, this is apart from the money that we want to make. Obviously, the objective is to make money. But why? Now, if you recall, I made you do an exercise on day one itself. This is where it comes in. This will be like the mission statement for your business. In our sample plan, we have set ourselves the compelling reasons of 1, to have a beautiful quality of life for my family and myself. And number 2, to have the freedom to choose where I wish to live. Now, these are reasons that attract me. They may or may not work for you. Choose something that really drives you. The importance of this business is going to be a constant driver for you. When the stakes are high, we are willing to make these sacrifices. But if they're not attractive enough, then we are not ready to go the distance. The story of Ben Breen's video gaming skills are a constant reminder to me to show the influence of desire on our action. You see, Ben is a gaming wizard, and he can beat most players hands down. In itself, this is a great feat, right? But what makes it truly inspiring is the fact that Ben is blind. Ben was born about 4 months too early, and as a result, he was left blind since birth. So he'd been blind since birth. But his desire to play video games has given him the fuel to endure hours and hours of trial and error to perfect his gaming skills, to time each click, each sound. And as a result, he frequently goes against expert gamers, destroying their on-screen avatars. In fact, he really messes up the mind when he plays while facing away from the screen. You see, he's blind, so he doesn't need to face the screen. But it's his desire to play that has made him so good, even though he's blind. And that's really what I want you to understand. Having that desire, having that goal in mind that I want to get there, that really fuels your actions. So you're ready to endure pain if the results, if the benefits are something that you're really passionate about. So put that down on your the first thing in your business plan, in your investment plan. Put down why we are doing this. And the more emotional you can make it, I've been telling you not to get emotional, but in this situation, you want to be emotional. Create that emotional connect with your business plan. So that's the first thing we put down. Now, goals. From the objectives that you've put down, you will then have specific goals for your investment system. These are the more practical goals. These are required to meet your objectives. So, for example, if you want to be financially free, you need to be making enough returns from your investment system to make sure that your costs are met. Right? And for that, working backwards, what are the kind of returns, given the size of your capital, what are the kind of returns that you should be aiming towards? These are what will come under your goals. And obviously, these will change depending on your objective. So, depending on your objective, you will specify the goals. For my objectives, the one I've stated earlier, these are the goals that I've put down. Number 1 is income goals. So I will have 5% of my account or 5% returns on my account per month. And wealth goals will be 40% returns on my account per year. Then moving on, second are the markets. This section will put down all the markets that you will be targeting. In India, the equity market, together with the derivatives, is the most actively traded market. This market is open from 9:15 in the morning to 3:30 p.m. The commodity market is another popular option. This is more because it is open till 11:30 p.m. Now, for the people who are working, who have a day job, they find it easier to trade in the commodities market because they can come home, and then that's really when activity in the commodity markets pick up. The foreign exchange market is another one that is picking up steam. So you can trade all the currencies that are linked to the INR, to the Indian rupee, right? So you have USD INR, GBP INR, Euro INR, even the Japanese yen versus INR. These are the popular ones that are trading well in the currencies market. You can decide whichever one appeals to you. For me, it has always been options market. Option strategies in particular has been my passion for the last 12 years now. But that's my passion. That's my focus. You decide on whatever works for you. So for our sample plan, we have selected 3 markets. 1, equity for wealth goals. 2, equity futures for income goals, and equity options for income goals. I've also put down another rule, which is that I will be entering only long trades, which is buying to enter. Now, you may decide which works for you. A lot of people like going short, and if that's you, that's not a problem, but put it down, right? So you can say, I want to do both long trades as well as short trades, or I want to do only short trades or only long trades. That's up to you. Then we move on to entry rules. Now, the entry rules will decide when an opportunity, an investment opportunity exists. This means that it leaves no guesswork as to when an opportunity exists or it doesn't. We've already covered this in the market timing part of the course, but I'm just mentioning it here again, that the market timing strategy is going to define when you're going to enter. So in your trading or in your investment plan as well, this will come in. This will define what your entry strategy is. So the end result is that you will have a clear marker as to when you're entering, when you're exiting. So for the sample plan I'm putting down, I will make a short list of 20 companies from sectors that I have prior experience in, example, banking and finance, engineering, technology. Secondly, I will map their fundamental parameters, revenue, margins, debt, assets, market outlook, product portfolio. All this will be tracked. I will set up a scoring system that gives a rating for each parameter. The total score will give me an indication whether the company is worth investing or not. Greater than 80, invest. 60 to 80, watch, and less than 60 is discard. Then, once the scoring system has given me signal to buy, I will analyze the monthly chart of the selected company, looking for the formation of a clear uptrend. After making a high, when the price retraces to 50%, I will enter the trade. Now, I want to point out here how descriptive and how particular this strategy is, or these rules are. It's not enough to say that when there is a specific good news in the market, I will go in and buy a particular stock, right? I will wait for my price. I will watch for the trend to change. It's a combination of fundamental as well as technical. Now, do I actually use this strategy? No. So full disclaimer there. I don't actually use this strategy, but it is a strategy that I've found some of my peers use, and it works. It works. But again, it depends on the objective that you have. So again, disclaimer, this is a strategy that I don't personally use. It is only for representative purposes. So please do not go and copy this strategy into the live market. You can do that, but what I would like you to do is go through the full system to figure out whether this strategy is worth investing or not. Okay, so this is the strategy that I've put down. You can rely completely on technical parameters. You can rely completely on fundamentals, or like in this case, have a combination of the two. It's entirely up to you. Then we move on to exit rules. Now, these are similar to the entry rules. You also have objective exit rules, which gives you exact position or exact instances where you will be exiting the trade, both for profit as well as for losses. So for the sample plan, we have stop loss will be set at a price lower than the last low in the monthly chart. Stop loss order will be executed as soon as the purchase price is set. I will move my stop loss to break even once the price move has given me a risk reward ratio of 1:1, which is that the initial risk is equal to the current mark to market profit. And then I will keep trailing my stop loss, booking more and more profits as new lows are formed. Now again, this is something that I've given for representation. I don't particularly use this. In fact, I believe in having one stop loss and one target. I don't move my target. I don't move my stop loss. And the reason for that is that in that instance, my risk to reward ratio is defined, right? As long as as long as my success ratio is tracked, as long as my success ratio is in line, as long as my risk reward ratio is in control, I stand to make the kind of returns that I've targeted. But the underlying requirement for this is that you have developed the mindset of a professional trader. If you have that, then the losses that you take will not matter. So we'll discuss more on that when we come to the part on emotions control or developing the right mindset. But just to point out that in this instance, it is more representative than anything else. Risk management rules. So in the business of trading, in the business of investment, capital preservation is absolutely paramount. It's my founding mantra, right? Without capital, I have nothing. My capital is my machinery, my factory, my workers, my raw material, everything. Without my capital, I don't have a business. So preserving my capital becomes absolutely paramount, which is why risk management is a very important part of your investment plan. So for the sample plan, I will have these rules. I will always identify the maximum risk on every trade that I take. I will always use the stop loss, and this has to be put in. In fact, I will put that as the first one. I will never risk more than 1% of my account for income generation and 2% of my account for wealth generation. I will only invest in opportunities with a minimum risk to reward ratio of 2:1 for income-oriented investments and 3:1 for wealth-oriented investments. The maximum loss on income generation is 5% and wealth generation is 10%. Just to explain, what do I mean by maximum loss? If my strategy has given me an overall loss or drawdown on my portfolio of 5% or 10%, I will stop trading that strategy for a bit, maybe for a bit, or abandon it altogether. This gives me a chance to reflect whether the strategy that I have deployed is actually making money or not, whether it actually makes sense or not. So that's something that you want to have a cutoff point at which you can say that this strategy is not working, or at least you want to evaluate it or test it further. And then we move on to resources. You also want to list down all the resources that you will need to execute your investment business, your trading business. Obviously, capital is one of them, but we also have other things that we want to make sure that we have in place before we start getting into the market. So I've listed down for the sample plan, I've listed down some, which are typically what you will need in a business setup. And finally, monitoring. Now, once you started implementing your strategy in the real market, it is very important to log each trade in your trade log. Your part in all this, remember, is to follow the rules without exception, to execute flawlessly. So it doesn't matter what the result is. You need to just follow the rules. Sounds easy enough? Trust me, it's not. As you will learn in the section on the psychology of a professional investor, it is important to develop the mindset. And you will understand the complications that our emotions, our mind creates in execution of our plan. For now, what you need to know is that you need to make sure that you log, make a note of all your trades, put them down in the trade log template that I've given to you. It's a template of the trade logs. So the trade log tracks the following parameters of every trade. 1, the script name, volume or position size, buying price and selling price. With these details, you can calculate all the others. Profit or loss, brokerage, risk reward ratio, even taxes can be calculated based on this information. So that's all that is there as part of your investment plan. In the next video, I will take you through testing and how you take a strategy that has been given to you or you've developed and make sure that it is exactly in line with what you're expecting. So I'll see you there in the testing section.